In this video, I'm going to show you how we execute a wave 2 strategy. I call it the second wind strategy. So basically when a collection gets a second wind. So how does this work? Why does this happen? Where might you spot it? So let me just close this sidebar for a second. This is a collection called 4chan. We're not going to get into the specifics of the collection, but basically 4chan is the name of a famous website, and they basically piggied off that famous meme or name. And the important thing to note is that at the beginning when they launched, this was 1:30 my time. They had a really good launch, and you can see here on a smaller time frames they had a good pullback, and that would have been the kind of panic dip there at 36 and then run to 400. Crazy good trade that. And unfortunately I was watching this and the price was getting away from me whilst I was watching other collections. So this is actually not one I was involved in. But it's okay. Collections, good possibilities of 5x or more come every single day, thank God, when it comes to meme coins, especially Solana meme coins, so nothing to worry about. See, the volume there was very high, like I've explained to you in videos before. Volume is high. This is all wave 1 territory, and the wave 1 period is done, usually within an hour or two. So this is it. This is wave 1 trading done. Now, there's still opportunities as we go forward, but basically that's wave 1 done. And we're talking about wave 2 now. And the important difference in wave 2. So at the beginning of wave 1, as we know, at the beginning, there's a lot of scams, a lot of rogues, and just 10 minutes into a collection, if the collection is still standing, it has good liquidity, it's burnt, they've avoided all of that. And you can do a few wave 1 strategies like the panic dip strategy, etc. Or you could do a direct launch kind of snipe. But then that moment's passed. So what's happening over here? So we get this dip afterwards. And a lot of the collections, as you know, this dip is the final dip. It will just literally fail, go right back to initial liquidity, which is 1 or 2K, and you'll never hear about that collection again, and it will never pump again, and there's no volume, and nobody's interested, and it's done. So literally within 2 hours, it's done. That is the majority of collections, as I've said many times. However, some of these collections get a second wind. They tend to be the ones that reached a higher market cap. So keep an eye on that. The ones that initially made a decent market cap, not 30K, 40K, 50K, sometimes not even 100K, but the ones that are multiple 100Ks, they are very, very nice fruit, potentially low-hanging fruit for a second wave attack. And that's where I did get involved. And that's where you can too. So with these, you get the pullback after a few hours, and then price settles. This actual chart isn't classic. Usually what will happen is the price will kind of settle down. But anyway, let's scroll through. And notice I'm on a 1 minute rather than 1 second, because as soon as we get past wave 1, don't need to worry about 1 second chart anymore. We could jump to a minute chart, which is still obviously very, very small. But we need the minute chart, and I need the minute chart so I can really see what's been going on with the price in terms of ups and downs. Now, there are a few places there where you could do a quick snipe. You could buy, make a quick 1x, 1.5x or 2x and stuff like that, which is fair enough. So if you got in and you sold, then that's fine too. But notice afterwards, the volume slowly dying down. But notice it was creating a base. It was never going below this kind of 150 base, again, psychological level. It seemed to be sticking around here. As soon as it got to around here, people were just buying, whoever it was. And it was just holding on to support. So here, from 4:30 to 5:30 nearly, it's a whole hour. Anytime you bought in here, you were basically buying a dip. And this is the second wind strategy. You're buying a dip. You've got a lot more time to do it. And there's a lot less risk. Because it's a bigger market cap, lots more liquidity. It's very safe now. It's launched hours ago. So everybody knows about it. Everybody trusts it. Nobody's fudding it generally in the Telegram groups, etc. And if you buy here, the good thing is, because it's a higher market cap, if it drops to 130 from 150, you're thinking, oh my God, all my Solana's gone. Well, not really. So if you put 15 Solana in, so let's say 1.5, more realistic, and it dropped to 130, and you're like, it's not working out here, you lose 0.2 Solana, literally nothing. It's a lot less risky, actually, than the launch ones initially that I've shown you, where you might buy at 3K. This is 150K, so you might buy at 3K, and it drops to 2K, and you're thinking, that's no big deal. But that's actually 33%. It's a lot, and there's a lot more slippage as well. So your 1.5 would probably go to less than 1. It would probably be left with like 0.8 or something like that. So these higher market cap ones, there's actually less risk in a way in terms of massive price movements. And also the price movements take longer to grind down. It doesn't just happen within a second. So keep that in mind as well. So these are really good ones to trade. And you can see after we based and we're in profit, a lot of people are in profit. And the good thing is, after a few hours, a lot of the early flippers, investors, fudders, jeeters, they're all gone. So a lot of the early folk have cleared off. And later on, it's actually whales get involved in second waves and third waves. And they tend to have a lot more money to invest. And they're looking for something a little bit safer. And this is where they might accumulate. So whenever you see price going sideways on any time frame, sideways but not dropping, that's a good sign, because meme coins, as I've shown you, is usually pump and dump. So if they're not dumping, something's going on. And the good thing is, if it's going sideways, you know something's going on. Other people are like, oh, it's sideways, what's the big deal? But you know, sideways can be very bullish because it's building a base. Very, very bullish. And the good thing is, if you keep buying into that, the price won't go up with your buying because it will stay sideways. So you just buy it in small chunks. A little, let's say you had 4 SOL that you wanted to put into this. You buy 1 SOL, then 1, then 1, then 1. And that's how you approach it. And then, you know, it doesn't really move the price that much or cause any kind of problems. Then the good thing is ascending triangle again. So you draw the top there as a triangle shape going slowly up. Yes, we have a couple of dips and stuff like that, but you got in well before. You got in at 150, you're holding profit here. And if you want to, you can take a little 25%, take a little profit here. Once we get to 250, 300, because that's literally a 2x right there, you can take a little bit of profit. And then the good thing is you can hold the rest. But again, what's it doing around that 300 important psychological mark? It's ascending triangle again. These are not perfect shapes, but you can tell it's pumping. People want to buy. And so every dip they're buying up, buying up, buying up. And then suddenly all of this energy with all these ascending triangles, boom, we go straight up. And when everybody else is thinking that's the time to buy in, you obviously know that that's wrong. That's the time to sell. You sell into the pump. And the pump didn't last long at all. Remember, this is a 1 minute chart. So literally from 400, it was at 700 for 1 minute. And then somebody just dumped a whole set. Who knows? Could be the creator's bags or something. Who knows? But anyway, even when we're back down here, we were playing around 500 for how long here? 10, 15 minutes. Plenty of time to take some profits. And why would you take profits here? Well, you've seen a higher, you've seen a top there. Almost a boom and bust top. Okay, no problem, no big deal. We could still keep pumping. But when we need to keep pumping, we need the price to be laddering upwards. It's not. We got a lower high here, lower high here, and then we're going sideways but down. That's the thing. We're going sideways but down. Ladders starting to creep down. Lower highs. So even here you could still sell out for 500, but you know now 500, we were over it for a while and we're trying to get over it again and we're struggling. So then it drops all the way down to 300. And then to be honest, whatever happens after that, I don't really care. I've taken my profit and then it gets kind of sketchy because we're kind of in between 2 big zones here. We could build up momentum. We might not. We don't know. So we tried this weak effort. We got just over 500 and that was the kind of last straw. But the good thing about these moves is if you missed out selling or you were asleep or something, because second wave is a longer strategy. So you might, for example, this move, this doesn't happen in a few minutes like it does in wave 1. It takes longer. So from here, what we're talking 5 to 7, that's a couple of hours you would have to hold and keep an eye on that. You could take profit a little bit before, but yeah, a couple of hours. You still get these other opportunities in these larger market ones where they try and make one final rally. It just exhausts. And when you see this exhaustion, you should be out. And many opportunities here to get out, take your profits and move on. And then after that, what happened? 500 starts dropping down. And the second wave's done, by the way. But you might think, well, could it potentially pump again? Well, yeah, you could technically do the same strategy, but not once we've already kind of seen that. But in theory, if this bottoms and we get volume coming in, this could pump again. But what do we need? So we have basing, that's good. We had a price pump there, but then it failed. And then we were going sideways and down, we were starting to grind down. Again, not a big deal. Take a small loss here. You can hold, take a small loss, no big deal. But remember this move here, when we look back here after it was basing, there's a lot more volume here. You can see the volume spikes at the bottom. The volume spikes got higher, not lower. But here, when we got back to this base, there's hardly any volume in the collection. And you can see here it's completely dead. So if you're looking at the bottom and you're seeing volume, basically means just how many people are trading, buying and selling. So you're seeing some buying, and then here it's completely dead. Dead market with no volume. The price always trends down to 0. So if there's no volume, it always trends to 0. Just remember that for meme coins. And then what did we do? We kind of messed about. Some volume came in a little bit, had a quick big spike there, back down, went sideways again, and then it just grinded down. And now what do you think it's doing? Slowly grinding down towards zero. It's that most people have sold out. 1 or 2 people will still be holding. It's down at 10,000 market cap now, and it's done. So this was a massively zoomed in thing, but let's go scroll out to a 5-minute. Let's remove some of the drawings so you can really see what happened here. So you really zoom out, you can see here very clearly we had a wave 1 move. This is the wave 2 strategy, and then it died. And this is why I explained on one of my initial videos the 3 waves you get, and not all collections make 3. So this is one of the ones that made 2. And then you get those very, very rare ones that do that 3rd wave. But the price wouldn't have gone down here first. What would have happened is we would have hit that again, consolidated, broke out, consolidated, and then set up after a few days for a wave 3. Those are the big collections like Dog with Hat, Gently Used Honda Civic. That was one of the big ones. Myro, Bonk, all of these ones. Those do the wave 3s. Wave 3s, I don't waste my time on generally because you could be taking a lot of time for it. Basically, the other thing is every time you invest, you want a return as soon as possible. So if you can get you can double your Solana within 15 minutes, it's better than waiting a week or 2, hoping that it might become a wave 3 or something bigger. So keep that in mind. And then the other thing is when you get to these larger market caps, you might buy here. Let's say it's pumping. You might buy here at 600,000 market cap. And then it goes to 900 and you're like, wow, that's amazing. It's gone really high. But that's basically for you is 1 Solana invested will turn into 1.5. Yeah, that's nice. But tonight I'll do one where I'm buying in at 2K market cap and it goes to 6K and then the collection completely rugs or fails completely. And you're thinking, well, that's not a great investment. But my 1 Solana at 2K turned into 3 Solana at 6K. So your much more legit project that moved up 300,000 in market cap or millions in market cap, your flip wasn't as good as my one on this basically crappy project where I just got in really quickly and got out fast as soon as I saw price struggling and I made a better flip. So keep that in mind as well. As we get higher market caps, the returns are less and less. Like even this one, I said 150. And I think you can ignore the pump to 7. That was lasted like a few seconds. But basically, it pumped to 5, let's be fair. And 150, if you didn't time your entry right, you might have got in at 170. So, it is good. It's not even a 3x, to be honest. It's a little bit less than that. But realistically, you would have made at best a 2x because you wouldn't have timed the entries perfectly. And a 2x is fine, but you can make those all day long in wave 1 trades as well. So just remember that. But anyone that's pumped well and is doing good and is pulled back and you see it basing like that early on within a few hours of launch, expect that there could be a wave 2. And some of the wave 2s, they can be crazy. I've seen on some of these random Trump collections, these wave 2s can take it from 100,000 to like 3-4 million. So that, yeah, they can get crazy. But yeah, just keep that in mind. And wave 3, generally, I don't bother with because it takes too long. But I'll discuss it in the training as well, because especially if you're an investor and you've got a few more funds, you might want to put some longer term investments, much like you might do with altcoins. And longer term, I just mean like days to weeks rather than just hours like we've been doing. And you may wish to do that if you see the right setups, which I will describe to you. Thanks for listening.